Welcome, everyone, to another deep dive. Today, we're plunging into a pretty significant legal saga. It's defined the digital asset space for nearly 5 years now.
That's right.
We're talking about the conclusion of the U.S. Securities and Exchange Commission, the SEC versus Ripple Labs lawsuit.
Yeah.
And this isn't just about, one company. It's a battle that's fundamentally reshaped how digital assets are seen in the U.S.
Exactly. And what makes this particular case so compelling, I think, is that it didn't just end with some quiet negotiated settlement.
Right.
It ended with a firm judicial order. And paradoxically, despite Ripple facing financial penalties and injunctions, it really represents a major victory.
A victory. How so?
Well, a victory for clarity in the broader crypto ecosystem. Our mission in this deep dive is really to unpack this complex journey, this whole thing, and understand its far-reaching consequences for you.
Okay, so let's dive right in then. How did this all kick off? The SEC started this back in December 2020, right?
December 2020. They accused Ripple of conducting an unregistered securities offering.
Okay.
Alleging they raised over $1.3 billion through XRP sales.
Wow. $1.3 billion. That must have sent some serious shockwaves. I remember the price plummeting.
Oh, absolutely. Genuine shockwaves. XRP's price tanked, and you had major exchanges like Coinbase delisting it.
Yeah, it felt like the sky was falling there for a moment.
It really did. But the crucial turning point and what really changed the narrative came in July 2023.
That was Judge Annalisa Torres's summary judgment.
Precisely. That ruling introduced this nuanced concept, the manner of sale doctrine. She basically split things up.
Okay. How did she split them?
She distinguished between two types of sales. First, institutional sales, Ripple's direct sales of XRP to, sophisticated buyers. Those were deemed unregistered securities.
Okay, so that part was a win for the SEC.
Yes. But then, and this was the groundbreaking part, programmatic sales, the sales of XRP on public exchanges, those were not securities transactions.
Not securities? Why the difference?
Well, the key reasoning is that retail buyers, the average person buying on an exchange, they typically didn't know they were buying directly from Ripple. So their expectation of profit wasn't directly tied to Ripple's efforts in the way the law usually requires for an investment contract.
That split decision is fascinating. But what does it really mean, for the broader market? Does it really limit the SEC's reach on secondary trading?
It's a potential game changer. I mean, it provides powerful legal clarity, suggesting that secondary market trading of tokens, where buyers aren't directly linked to the issuer's efforts, well, that often falls outside the SEC's jurisdiction.
Right. Huge implications there.
Massive. It really changes how other digital assets might be viewed.
So, with that clarity established back in 2023, what happened next? This legal battle dragged on for a while longer.
It did. Fast forward to August 2024. The court finally imposed a penalty on Ripple, $125 million.
Okay, $125 million. Still a lot, but much less than the SEC wanted, right? They asked for $2 billion.
Yes, exactly. A far cry from the SEC's initial demand. But perhaps more significantly, the court issued a permanent injunction.
An injunction. What does that block?
It explicitly bars Ripple from making those unregistered institutional sales of XRP in the U.S. going forward. The very sales, the court said, were illegal securities transactions.
Got it. So the court drew a clear line on that specific activity.
Yes. And then, this is where it gets really cemented. Just last month, June 2025, both sides actually tried to settle.
They tried to settle after the judgment.
Yeah, for a smaller penalty and, crucially, to get rid of that injunction. But Judge Torres said no. Flat out rejected it.
Really?
She stated, and I'm quoting roughly here, the parties do not have the authority to agree not to be bound by a court's final judgment.
Wow. So the judge basically said, my ruling stands, you can't just negotiate it away.
Pretty much. Faced with that judicial stonewall, Ripple consequently dropped its appeal. That cemented the original judgment. This wasn't some handshake deal. It was judicial authority drawing the line.
Okay, connecting the dots then. This injunction, barring those institutional sales in the U.S., what does that mean for Ripple's actual business, like their on-demand liquidity service?
Yeah, it directly impacts ODL within the U.S. It forces Ripple to pivot quite sharply, actually.
Pivot how?
Well, it means accelerating their global expansion even more, focusing on securing licenses in places like Singapore, making acquisitions like Medico, even launching their own stablecoin, RLUSD. The U.S. institutional market for XRP sales is effectively closed to them without registration, so the world becomes their main focus.
Right, adapting to the ruling. So what does this all mean for XRP, the actual asset? Its price has been on a roller coaster, hasn't it?
Oh, absolutely. Incredibly sensitive. Remember that huge 70% surge after the July 2023 ruling?
Yeah.
And then that little dip, maybe 3%, just last week when the final settlement attempt was rejected.
It's almost like a live market sentiment gauge for regulatory clarity.
Exactly. And the conclusion of this lawsuit, this finality, it's widely seen now as clearing the path for something big. A spot XRP ETF in the U.S.
An exchange-traded fund. Like the Bitcoin ones.
Precisely. That regulatory clarity for secondary market trading, the confirmation that XRP traded on exchanges, isn't a security that's the crucial factor.
And that could mean significant capital inflows.
Potentially, yes. Similar to what we saw with Bitcoin ETFs, could bring in significant capital, boost liquidity. Some analysts are even forecasting XRP could climb, somewhere between $2.70 and $3.30.
Interesting. But beyond just an ETF, I guess the long-term value still hinges on actual use, right?
Absolutely. Things like the growth of Ripple's ODL network, especially internationally now, and the continued development of the XRP ledger itself.
Like that native AMM, the automated market maker they launched in March.
Exactly. Things that build real utility on the ledger. That's key long term.
So zooming out again, this case wasn't just about XRP, was it? It feels like it set a precedent.
I'd say it created a new playbook, or at least part of one, for U.S. crypto regulation. It offers that manner of sale framework.
Moving beyond just, is it a security or a commodity?
Right. It's a more nuanced approach. And, it might signal a potential waning of the SEC's whole regulation by enforcement strategy. We've seen them drop or pause other major crypto cases recently, too.
So this deep dive really shows how one landmark case has truly reshaped the whole landscape. Legally, strategically.
Definitely. And the legal clarity from that manner of sale doctrine, that's the enduring victory here. For the broader industry, I think that outweighs the specific operational constraints put on Ripple.
Okay.
The focus now really shifts, away from the courtroom and onto corporate strategy, market opportunities, administrative processes.
So for you, our listener, here's a final thought to chew on. We now have a federal court ruling, unappealed, on XRP's secondary market status. How will that judgment interact with any potential comprehensive federal crypto legislation that might come down the line?
That's the big question, isn't it?
Which path will ultimately define the future of digital asset regulation in the U.S.? The court's precedent or new laws from Congress? Keep a close eye on Ripple's compliance, those potential spot XRP ETF filings, and definitely the SEC's shifting enforcement posture.